Hey guys, what's up? Hope you guys are having a great day today. Happy Wednesday. It is the 10th of June. I can't believe that June is already here. This year has been passing by super fast. But anyways, welcome back for another episode of the Weekly Market Analysis. Hope you guys are having a great time and a great week. You know, in all honesty, I think the reason why it feels like it's passing by so quickly is probably because of all the craziness of life and all the virus and the protests and the riots and stuff like that. There's probably a whole host of reasons as to why everything is crazy. But that said, guys, you know, we can always find good times in the bad. We can always find good opportunities, and we can always choose to be happy regardless of what's going on in our lives. I know that's difficult. I have a hard time doing that as well at times, but, you know, sometimes just bad stuff happens. But anyways, let's go ahead and jump into the charts. We will talk more about non-chart related things towards the end of the episode. All right, so past couple days, I took pound CAD was last week, so I shouldn't say past couple days, but I guess you could say it's a couple days ago. Pound CAD I took last week, and unfortunately, we ended up getting stopped out of pound CAD for a $100 and I believe $13 loss, or maybe it was $116. I think it was $116 loss. Kind of sucked, but then I turned around and I ended up looking at the euro pound, which I actually did an in-depth full analysis on. So if you guys are interested in that, go check that out on TradingView. But here we go. Here is the euro pound, and the euro pound actually ended up giving us a winner, which was amazing. I love winners, right? Winners are absolutely awesome. They make me feel good. Even though it's not real money right now, it still feels awesome. The euro pound ended up winning me $111. So let's look at the chart, or let's go ahead and look at the TradingView Trade Analysis Journal. And, we went through a big winning streak here. So it's pretty normal to have a loss here or there during one of these winning streaks. Hopefully this winning streak actually keeps up. Here was a bit of a streak right here. But aside, another one, so we're going 4 and then another 4 right here. So those were, so far with this strategy being on untested pairs, the market appears to only give us 4 wins inside of a winning streak. However, this time around, as you can see, we're already at 5 right here and plus another 2. So we're already at 7. And if you include this one, 8 back here. So we have 8 wins virtually in a row. So that's all pretty exciting. However, I do think that dollar yen is going to be a loser, and I think that the losing will continue. And let's go ahead and talk about the dollar yen here. The dollar yen is the currency pair that I have, the only trade that I have on for this week. Unfortunately, I checked my entire currency pair. I actually put trades on last week, and when I came in and looked at it this week, nothing has filled. Just nothing. There were some genuine missed opportunities where the market had gone higher. I'll show you those after we analyze this. And, there were some genuine opportunities that I ended up missing because I wasn't watching the charts when they happened. Which, admittedly, I've been so busy with content creation and everything else that I have had a very hard time coming in every single morning this week to actually look at the charts. So I have missed opportunities as a result of that. I'll be the first to admit it. I'm not happy about it, but that is what it is. I strive to provide transparency and honesty with you guys, and that's one of my big goals. Is I want you to know that when I tell you something, when you come and you listen to me, it's honest. I'm being honest with you. You may not agree with my ideas, you may not agree with my analysis or on things that I say, but I'm honest. But I will be completely honest with you. It's just when you're doing a lot of content creation and stuff, it's difficult. It takes a lot of your time up. I have a hard enough time just doing videos, or just doing social media work for the content creation. That takes a while too. Just doing the social media legwork. Once you create the content, you got to get it out to social media. I'm very terrible about getting it out to social media. I'm good. Aside from posting stuff on YouTube, that's about what I've got down to a science now. But Anyways, that being said, enough of excuses. Let's move on into the euro or the dollar yen. All right, so actually, did I say the euro? Okay, dollar yen, good. For some reason, I was thinking I said euro yen. That would have been bad. Okay, dollar yen here. So as you can see, we broke above this structure level right here, skyrocketed off, and then finally came down. I'm going to be completely honest with you. The market is kind of consolidating right now, and so it was going down. It was bearish since March 25th. And in reality, I guess if I was looking at it from here, I'd say we're in consolidation because the market isn't really going in any one direction. It's not moving from the top left to the bottom right of the screen or from the bottom left to the top right of the charts. It's not really moving in one direction. It's just going sideways. So this is primarily consolidation. That's how I see this. Yes, we were bearish from February to March, and then we were bullish from March 9th to March 24th or 5th. And then, of course, we were bearish from March 25th down to May 6th. So you could definitely say that was the case. And now we are bullish from May 20th so far up until June 20th. Now, what are we doing right now? I mean, we've got a lot of different tiny little trends and stuff happening inside of the consolidation. This, though, we've blasted past my entry level, and it's just not looking good. I'll be honest, it doesn't look good. It looks like this is going to end up stopping me out. It could rally. I mean, we did break above this structure level here, and I would think that would definitely be an indicator for some trend continuation awesomeness where we retrace and we rally again because the market was indicating that we were going higher, but the market is fickle, and a lot of times the market can't make up its mind. So this is one of those times. Despite the fact of breaking up, that doesn't mean it's a guarantee that we're going to go higher. That's just an indication that we could go higher, and the probabilities of that is something that I'm testing out right now in my trading strategy. So anyways, that being said, we broke past my entry level, and we're getting dangerously close to the 106.97 area. I'm really thinking that this is going to be one of those things where I just get stopped out. I'm really thinking that's the case. Honestly, we are really close to a double zero, an even handle number, the 107.00, as you can see over there on the far right price bar. Well, exchange rate bar, right? And this is kind of like the price exchange rate bar and stuff like that, or at least that's what I'm calling it. I don't know. I don't think that's the official name, but we are hovering around the 107.00. That is an even handle number, and my stop loss is only slightly beyond that by like 3 pips. So I'm going to be completely fair with you. I'm pretty sure we've got confluence with regards to even handle number. We've got the fact that we've just totally been going down, 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 and we're only slightly oversold by like a little less than 2. Honestly, to be oversold, it has to be under 20, and we're at 1832, so a little less than a little less than 2 points there. And then over here, we were slightly oversold at 16.84. So, we are oversold. We were more oversold here at 810, but the market didn't really care about it and is currently rallying. Now, sometimes the market goes overbought much sooner than before the market peaks, right? So we were overbought heavily at 94 right here. And then we rallied even more, and then we became overbought again. My overbought signal is when the RSI goes above 80. Now, I don't use this in my trading to determine where or when I take trades, and you can absolutely do that. Just know that the relative strength index, while it's a good indicator, it's not perfect, right? No indicator is perfect. So currently, we were overbought right around here, and now we're rallying. Again, when I'm talking about the relative strength index or the average true range, use the southern pointing tip of the cross that comes all the way down here. I'm using the crosshairs. Look at the line as it comes down here and look down here and then look to the left to see the actual number. So I'm hovering over this structure high here, but if you look down, you'll see that the crosshair, at least the southern cross, ends up pointing over 83.08. So we are 3 points above the 80 marker that I have to have in order to be considered overbought. And yeah, make sure to look left for those numbers. So there you go. So, and then we ended up falling. But just because the market goes oversold doesn't necessarily mean that we're going to rally. I mean, you can see here, we were oversold right around here. And, you can see this, it dipped below the green line there. And let's try to get a number. It was like 1593. And it took us a little bit. We ended up dipping even more, going oversold a second time at 1066 before we ended up rallying. So again, sometimes we can go oversold and the market didn't rally, the market didn't do a thing, and the market ended up going lower. So, but hey, if we're in a downtrend, to be completely fair with you, who knows? We can go oversold a lot. So I don't know. I don't have a lot of confidence in this trade. I think that we're going to get stopped out pretty easily. This is one of the trades I placed this like last week. So I was hoping I'd have more options on, but this is the only one I got. So while that's a little disappointing, that's just the way it works. So we could go ahead and go through the other pairs real quick. Just kind of quickly zoom through the portfolio. Otherwise, this is going to be a really short episode. So here we go. I measured from this swing low to swing high, and I'm waiting for a 618 retracement. As you can see, we're nowhere near close. So odds are it's probably not going to work out, but we have it on anyways. And I don't really see a trade here. There's really not a lot of there's a structure level here that I could measure from. There's structure level here, here, and here. This is the major structure level that I would want to measure from, but that's a pretty big move. And these are all fairly minor. So what I'm going to do here is I'm going to wait for the market to kind of break below if it ends up doing that, and then maybe look to get short instead of going long. But right now, I just don't see a trade on the Aussie yen. I don't see a trade on the Aussie dollar. Same situation. Now, the little structure lows here, the higher lows, are actually looking a little better than they were in the Aussie yen. I'd feel a little better about drawing my fib retracement tool from here to here, largely just because the retracement is a little bigger. It's a little more well-defined. Still very much a minor structure level. Nothing to write home about, naturally. But, it is what it is. I still don't see much of an opportunity here. I see that there was an opportunity from here. If I had drawn my fib retracement tool from this swing low to this swing high, I do see that we would have had a 618 fib retracement, and it's going to probably end up rallying and break out for new structure highs. So I actually do see that as being a trade that I could have taken, but I ended up missing it. So that it's unfortunate, but that was June 9th. Which was yesterday, and I was not looking at the charts yesterday. I was so busy trying to get out content, doing a podcast episode. If you guys don't know, I have a podcast called the Matthew Spaziti Program. I talk about economics and financial freedom, and we talk about a lot of other things. Sometimes we talk about politics, religion, things like that. But for the most part, technology. I love technology. Although I don't actually think I've talked about it on the show yet. Well, we probably will at some point. But that being said, it's kind of like whatever I want to talk about. It's my podcast, right? So if you guys are interested in that, we do talk about trading a lot. Actually, I end up taking the last section of this video as an excerpt, and I apply it into the podcast just to kind of reutilize and recycle content. It's one of the best ways to use content that you've created and ultimately to be as efficient with it as possible. That way I can get 2 podcast episodes out every single week instead of simply just 1. So because I do that, if you guys watch these videos, you're going to see a lot of stuff. Every other episode from the weekly market analysis episode, every other episode in the podcast is an excerpt from the weekly market analysis. So, but that means that there's also every other episode that you guys don't hear about. So if you're interested, go check that out. It's pretty cool. I'm excited that I'm doing it. I'm very happy about it. So yeah, go check it out. But yeah, just content creation in general, guys, takes a long time. Monday, I was totally busy, working on trying to do social media work. I had to create social media accounts for the podcast. I mean, I'm been doing a number of podcast episodes, and yet for whatever reason, I never created a Facebook, a Twitter, or even a YouTube channel specifically for the podcast. It's a little different because it's just me talking about whatever I want. It's a little different than what we do here on the Matthew Spazzini YouTube channel and stuff like that. So, all right. That said, we have a potential trade here, but I just don't see it happening. I think it's going to rally and continue to go from there. Oh, hey, look at this. Look at it. We got filled. All right. That literally just happened because that was not the case before. Awesome. What did I just do? I deleted a currency pair, didn't I? I'm on the CAD Swiss. I ended up deleting the CAD Swiss. Man. What happened? Why did I do that? Oh man, I'm really, really upset with myself for doing that. That's not cool. Oh wow, that's much better. That works way better. Alright, right there. Yeah, let's not delete that again. That's so funny. I can't believe I did that. It's the first time for everything, right? It's definitely the first time I did that. Alright. Let's go ahead and put 10 pips below the structure low. 69.45.2, so we're looking for 69.35.2. Hopefully this doesn't end up stopping me out as well, but if it does, that's okay, because I think that we haven't really done the necessary legwork for this strategy on all these currency pairs. However, the CAD Swiss I actually have. CAD Swiss is a currency pair that I have actually backtested the strategy on, so there is a good possibility. But I mean, not to say that I win every single time. I won like maybe 51% of the time on the CAD Swiss, but the CAD Swiss was very, very profitable. Probably one of the most profitable currency pairs that I've backtested so far. So hopefully it will continue with that trend, and we'll continue to end up making money with the CAD Swiss. So pretty self-explanatory here. We've been bearish since, December of 2019 all the way down to March of 2020, and now we're rallying, and we've been bullish since March, after March 2020. And now we're still bullish. So, we're traveling, let's look at it from this angle. We're traveling from the bottom left portion of the screen to the top right portion of the screen. That's what we're doing. That means we are bullish. Not to mention, we have an initial low, initial high, a retracement or outside return, whatever you want to say, and then we have an extension. Then we have another retracement, extension, retracement. We're making new highs, extension, retracement, extension, retracement. We're constantly making new highs. That is a strong indicator that we are going to continue to go higher. Now, not always is that the case. We could go lower. This could be a reversal. As you can also see, there is a very, very interesting setup here. We were bullish, and lo and behold, what do we have? We have a double top. I'm going to draw it in for those of you who do not see it. This is a very good double top too, actually. It's very obvious. Right there, double top. There's the V, the valley, whatever you want to call it. There it is, and it has been broken. In order for it to be considered broken, this line right here, the market has to come down here, break below, and close below this candle wick, the lowest candle wick of the valley, or of the V. And that has happened. And now we're continuing lower. This is a trend reversal pattern. Okay, very important to keep that in mind. This is a trend reversal. This usually means that the market has been bullish for a long time and the market is now turning bearish. Or if it's a double bottom, it means the market has been bearish for a long time and is now turning bullish. And that's what this means. Now, a lot of times these are not the most consistent patterns. You can see this happening, double top, retracement, rally. So this doesn't necessarily mean that the market is going to totally flip and just no longer be bullish anymore. That doesn't necessarily mean that's the case, but it can mean that. So you never really know. From my back testing of double tops, they're not the most accurate patterns out there. A head and shoulders pattern like we had here on the euro pound is definitely more of a better indicator for, a reversal in trend, or at least it's considered to be a better one. I've honestly never back tested them, but they're considered to be a much more accurate to identify a trend reversal. And as you can see here, it ended up working out, but I haven't seen evidence to suggest that this is reversed completely. So I don't know. Again, I haven't tested head and shoulder patterns before, but that's what I've heard. So that said, here we have another trade. Awesome. Double top, leading me into a 618 fib retracement. Not bad at all. So I'm actually very, very happy about that. Anyways, so yeah, we have the CAD Swiss here and, double top and everything. So that's really great. I mean, I'll be honest, I'm really, really happy that this trade ended up occurring, because this week was looking to be a very, very slow week for me. I wasn't finding any trades at all, and I literally just posted it. So let's go ahead and refresh this page. You're going to see that I literally posted. I actually ended up pausing the video to post it. I might actually do a trading view video for this one to do some analysis on the CAD Swiss. I might actually do that. So I don't always do videos for that, but I don't always do it. But because we've got the confluence here of a double top, it would be very interesting to talk about that on TradingView, kind of like we did here on the weekly market analysis video. But that being said, guys, I'm so happy because it was looking like I was only going to have like one currency pair to talk about, and it's like, oh, yay, that's not fun. Here, again, we just don't have anything. Now, I'll be honest, this is one of those moments where I'm really happy that I ended up missing out on this opportunity, because I probably would have drawn my fib retracement tool from this structure low to the structure high. I would have put my entry on here, and we definitely would have gotten stopped out. So this is one of those moments where missing trades ended up benefiting us. But, well, I say us, I mean me, really. But, I mean, yeah. Anyways, moving on to Euro Aussie. We've got a entry on here, but, not really close yet to getting involved. I mean, who knows? We could have a spike get involved in the fall. I actually really love it when that happens, when the market just gives us a massive spike and then it's rejected by a massive amount. We have this big, long candlestick. It's very obvious, or at least in most cases, that the market's going to continue lower at that point. Well, I say it's obvious. There's a high chance that it could. But I love it because the chance can be very high when something like that happens. But no trade here yet. That we're in consolidation at this point. As you can see, yes, we were moving from the bottom left to the top right. So that was a bullish trend. And then we went and started moving from the top left to the bottom right down here, as you can see. So we were bullish, or we were bearish. Now, though, ever since April 2020, April 30th, 2020, we've just been going sideways. Just sideways, nothing but sideways. And that's kind of it. So, that said, guys, I don't really see a trade here, a trading opportunity. I just don't. We didn't really break. We did break below the structure level, so we could potentially see the market come up here and then fall down to here. Yeah, we could, but it's in consolidation. And I generally try not to take trades in consolidation. Now, here, obviously, this was better. We had an extension, retracement, kind of some consolidation, extension, and then another retracement. And then if I had tried to get involved in that trade, we would have lost. So really, not enough trending to actually do anything with. The market wasn't trending enough. So that's one thing that you will realize with a trend continuation strategy like mine. I call it the 618 pullback because of the fib retracement level that I identify all the time. But it really is a strategy that primarily works in a trending market. It can make money in a consolidating market, but it loses more than it makes when the market is in consolidation, which kind of sucks because the Forex market consolidates something like 70% of the time and only trends like 30%. I'm pretty sure that I've heard said that. So, I mean, if that's true, then technically you wouldn't really think that my strategy would work, but you know, it does. It does, or at least it's looking like it does. I haven't traded it with real money yet, so we'll just have to wait and see. But this is another example where the market was bullish and has turned just in consolidation. I mean, yeah, we made a new structure low here, or we made a new lower close, and then we kind of retested this, but we haven't really made another new lower close yet. So we're just going to have to wait there. I don't see anything there. Don't see anything here on the euro yen. Just a lot of very, very minor structure levels. These are more blips in the market than anything else. Nothing valuable. Euro New Zealand, we are actually pretty close on getting involved, and we might get involved in this by the end of the day, possibly tomorrow. I found this trade, let's see. I found this trade around here, so if we come up, and unfortunately we actually did get involved. I'm hoping we'll get a second chance because I missed this opportunity, so I'm hoping I'm going to get a second chance. That's why the blue line is here. When I miss opportunities like this, I put the blue line here just to show, you know, another opportunity, or just to show me that when I actually found it, to remind me when I found it. Because when I come back into this, if this blue line is not here, I'm going to be like, oh, I found it, I'm already involved. But it's like, wait a second, if that was the case, I would have entered it on my Excel sheet, right? But I didn't, so what's up with that? So I put the blue line there to remind myself, and also to identify it to you guys that it's a trading opportunity that has, you know, that I didn't just fudge it and say, hey, this is where I entered. You know, this is actually when I found it. So that's me trying to be transparent with the trades, trying to be open and honest with you guys and whatnot. We have a potential trend continuation strategy here, or a pattern, but so far no cigar. Pound Aussie, again, we're not really all that close. However, over the next coming couple days and whatnot throughout the week, we could get involved. So it'll kind of just depend on what happens with this. You know, one thing you might be able to do, you know what? I didn't even think about this. I wish I would have thought about it before this happened. You might be able to take, because we're not... Now, I will say this. It is actually illegal to take a perfect hedge in any market in the US. Okay? What do I mean by that? I mean that a perfect hedge is where you take a long and a short position in the same asset. So stocks, bonds, futures, currency, Forex, whatever. And that would be an indication for that would be a perfect hedge. So it's actually illegal in the US to take a perfect hedge. I believe it is illegal for the Forex market. I think it's illegal in general for all of the markets. What you can do is you can take a hedge by, say, going long in the pound Aussie, and then find the inverse, the Aussie pound, and go long there, because the long in the Aussie pound is the opposite from the pound Aussie. So you can kind of hedge that way if you want to try. I'm pretty sure that's legal because you're going long in two different currency pairs. I don't think that would be illegal whatsoever. But that's what's called an imperfect hedge. So right here, we're not actually involved in the markets yet. So we could take, and we're also not even looking for the market to, I mean, this would be a shorting opportunity if we got all the way up here to 184.30. Right here, we're not there yet. I mean, this would be a long position, right? But there's a good chance that if this is going to continue higher, maybe there's an opportunity here. We've got an even handle number here, a double zero number at the 1.8400 level. So if this is going to be attracted to that, then we might actually be able to get involved. So if we get a little lower here, we might actually see a pop. So I'm going to have to watch this very carefully, but that's very, very encouraging. We might actually have another opportunity there. Good deal. All right, so since May 27th of 2020, we're just kind of going sideways, really. I mean, I don't know. No, we are kind of trending higher, but we haven't really made a new high past the structure level right here. So yeah, it's looking like we're going to push this, and we're definitely going to get higher. And if we do, then I would say this is now turned into like a bullish trend. So this is probably bullish at this point. I mean, we are, if you were to look at it from this, we are going from the bottom left to the top right. So I guess that would classify that as bullish for right now. This was definitely more just consolidation right here. So, but still, no trading opportunity. Don't even actually know why I have it highlighted. I think I had a trading opportunity. Oh, that's because on the pound CAD, we took that trade last week and we ended up getting stopped out. Which pretty much sucked. But all right, let's see here. All right, pound Swiss. Again, I found this late, clearly. Very, very clearly, because we definitely touched the entry level multiple times. Here's the thing. This is actually going to play out in my favor, hopefully. If the market rallies and ends up hitting my target, I'll get entered as well as hitting the target, which will make money. If the market continues to fall and roll over, then I never really got entered because remember, this is where the blue line, this is where I found it. I missed all this other trading that happened right back here. So because of that, if this falls and ends up doing effectively stopping me out, if I was involved in the trade, I don't lose any money and I can already know that it's a bad trade. Now, what could happen is we could, spike a little, touch, just barely kiss my entry and then rally. Yeah, that's the market just being a jerk, to be honest. That's just the market being mean. The market's like, oh yeah, I'm gonna kiss your entry just to stop you out, make you lose money. Granted, thankfully it's hypothetical money, but it still hurts. So, all right, pound yen, not really doing much. I don't really see a lot of structure. If I was measuring, I'd say from here to here, you might be able to find a trade there, but it probably was going to be a loser at this point. Let's go ahead and do this. Boom, and boom. All right, so if we get up here, we'll go ahead and get involved, but I'm kind of thinking that this is going to be a loser, just like the, what was the other trade I took? I took the dollar yen, but pound New Zealand coming up. We haven't gotten there yet, but as you can see, we definitely have a potential trend continuation pattern. Pound dollar, again, we're kind of coming up, but still not really much. I mean, I got my entry on, so we'll have to see what happens there. New Zealand CAD, same story. Nothing on the New Zealand yen. Again, I suppose I could take a trade from here. These are very minor structure levels, so they're not likely. They're really, really not likely to get, involved. But I guess if I wanted to try to take a trade, when the market does something like this, it is a good indication that it's a strong trade. So, if the market is hovering under, if it kind of, let's see what happens here. It may, in fact, touch my entry. I mean, it obviously already did, but I just placed it, so it doesn't really count. The price level is going to have to get sucked up here before this candlestick closes out in 12 minutes. It'll probably touch the entry level. Let's just see. If this takes forever, I'm not watching this whole time. This is already like a 33-minute video, and it's probably going to get longer because I still haven't done the whole podcast section, the little last excerpt from it. So I'm not going to do this that much longer. Yeah. Okay, so here, this is what we're going to do. I'm going to put a blue line, a blue dotted line. Yeah, that looks good. I'm going to put one like right here. Okay, that way I know. Yeah, it's a little too thick. That's a little better. That way I know this is when I found it. Just like that. Okay, this is when I found it. I found it on this day. This is the price level of it. That'll be enough to tell me if I end up getting involved. Which we probably will, because it's so darn close to it. Even if this candlestick doesn't do it for us, it probably will eventually go up here. But, I don't know. I really don't know. There's like 11 minutes. It's continuing to push lower, which is a pretty good sign. Well, actually not a good sign. If this is a long position, it'd be a bad sign. But, so frustrating. So frustrating. Okay, we're going to revisit that. New Zealand dollar. New Zealand dollar, nothing. Absolutely nothing. I guess if you draw something, you could draw it from here, but it's not really the best. Again, minor structure level, nothing really to write home about. It's probably not even going to work, but I guess you could. I'm not even going to bother doing that. I just don't see it. Dollar CAD. Right up here, we almost touched it, did not get involved. I found it back here. Maybe we'll get involved later on in the week. Dollar Swiss, we kind of continued a little lower, so let's go ahead and move this down, which is something you absolutely can do. Walk your fib retracement tools down and your entries down when the market starts to move lower. Dollar Yen. This is the one I showed you earlier. And yeah, this is when we got involved in here, and then we're continuing lower. This is not looking good or positive for me. This is actually looking like I'm going to get stopped out. Pretty sure I actually am, but you know, we'll just have to wait and see. New Zealand Yen. Okay, let's go back to the New Zealand Yen. Let's see this. Did we get it? Did we get it? Man, this is going to drive me nuts. It's really, really going to drive me nuts. All right, I'm going to pause this and come back and see if it actually, gets us in. Okay, well, I waited for about 9 minutes. We never actually got up and hit the entry. We've got 2 seconds left, and there we go. We've got a new candle. So right now, I don't actually have to watch this. I can literally just wait, and because I've got my marker, I know when I found it, and I don't have to watch this anymore. Good deal, because I hate watching charts. It may seem odd because I'm an aspiring Forex trader. I like trading and stuff. You would think that why do you hate watching charts? Because it toys with your emotions. It messes with your mind when you watch charts. So I don't know about you guys, but I hate watching them personally. I can't say that I enjoy it. I really don't. I don't enjoy watching charts. It's just, I don't. So and I think it kind of messes with your heads. I think it kind of messes with your psychology, and it messes with your trades. That's honestly how I really feel about it. So, but this is why I encourage people to, place your entries. Once you place your entry, your target, your losses, and then once you've set it, forget it. You're never honestly going to forget about it, but once you set your trades, you get involved in the trade. Once you're involved and you've got your exits and entries on, then don't watch it anymore. Otherwise, it's just going to tear you to pieces. Most people cannot handle that kind of emotional strain. Most people, that would drive them crazy. So, and I just don't, I couldn't do it. I don't think I could. I'm not the kind of guy that can sit in front of the charts every single day. So, all right, well, that being said, guys, let's go ahead and jump into the topic that I wanted to talk about today. I'm hearing a lot about that we are officially in a recession, and which I find that odd because I would have thought that we were in a recession a while ago. And we've been in a recession for a while at this point, but they're just now coming out and saying that we are in a recession, which I think is kind of funny in some ways, because it's like, we've been there for a while, and yeah, you're kind of late to the game. But, they're just saying it's official. The economy is officially in the recession. So, that being said, guys, it's one of those things where, look, I know that we're in a recession. We've been in a recession in a little while at this point, and a lot of people are hoping for a recovery. A lot of people are getting, if you've been laid off, you're probably emotionally just in turmoil. Your life is in turmoil. This is a natural thing that happens in the markets and in an economy. It happens. It happens all the time. It happens frequently, and it happens, with consistency. But you can choose to not take part in it. Now, I know that may sound like a really weird thing to say, that you can simply just choose to not take part in a recession, something that has affected many people. If you've been laid off, you may very well have been the person that it has affected. So the very idea that you could just make a choice and you don't, I mean, that, look, it may sound like an arrogant thing. It's not intended to be an arrogant thing. Okay, it's not intended to be an arrogant saying. Hear me out. Let me explain where I'm coming from. Okay? The reason why I say that you can make a choice and you can choose not to take part in it is that a lot of times when recessions happen and bad things happen, people constantly, and I mean constantly, just hover over social media and the news, constantly wanting to know what's happening, constantly wanting to blame the recession for their problems, constantly wanting to they eat up all the bad, negative news, and it's just a bunch of negativity, and it just destroys your life. You can choose to not do that. Even if you got laid off, you can still choose to not pay attention to the news, to not, buy into, to not get involved in all of the freaking negative recession news that the media is most certainly going to make a big deal out of. Right? The media never really focuses on very many things that are positive. Largely, the media is a bunch of negativity. And it just depresses us, right? It depresses me, so I don't watch it. You can choose to do the same. You can choose to not watch it. Look, whoever you're watching and listening to is going to affect your psychology. It's going to affect your mental state. So you need to be very careful about who you listen to. Too many people listen to the news when they shouldn't. The news doesn't add any value to your life. Aside from maybe the Weather Channel, when they tell you that there's going to be a tornado or something, which is a very real possibility here in North Texas, by the way. So aside from something like that, you really don't get a whole lot of value out of listening to the news, out of something that happened in some city or some town, maybe close by to you. But for the most part, in my opinion, you really don't need to watch or listen to the news, because it's just a bunch of negativity. It's a bunch of toxic negativity that can literally destroy your happiness and your life. So for me personally, I like to stay away from it. And that's one of the ways that you can choose to not take part in the recession, or not take part in all of the controversial stuff that's going on, whatever it is. I mean, there's tons of controversial stuff. Pick one. If you want to choose to stay away from it, then choose not to listen. Choose not to take part. Choose not to watch it. The second thing, and the second way that you can not take part in the recession, and you can actually choose to not take part in the craziness, is to focus on your own human capital. Focus on yourself. Now, I'm not trying to say ignore your family, ignore your friends. I'm not trying to say that. And I'm not, what I'm trying to say is focus on bettering you. Focus on yourself. Focus on bettering your skill sets. Right? So for me, this looks like focusing on starting your own business, focusing on your trading. Yeah, if you're on unemployment, you're sitting at home anyways. Maybe you're applying to other jobs. Maybe you're sitting at home playing a video game. I know there are people who have done it, right? Don't deny it if you're one of those people. I do it too. I would totally do it. If I was unemployed, man, I would, back in the day, I would have been on Call of Duty. And I would have been playing a video. I wouldn't be applying for jobs every hour of the day. I probably would have done a little bit of some job hunting, but I would have done it. So don't feel bad if that's you, because we all would have done something else. Nobody likes, being reminded that they're unemployed or that they don't have a way of making money. That just sucks. So one way of escaping that: play video games, watch TV, watch movies, stuff like that. Don't beat yourself up if that's what you're doing. But just know that you can't simply do that. You should really use this time in a more constructive manner. That being said, though, that's not the point. The point is that the second way that you can choose to not take part in the recession is you get out there and you start focusing on yourself. As you're looking for jobs, you start focusing on building your skills. Maybe you go to Skillshare, $100 for a whole year, guys. If you haven't done it yet, it's a no-brainer, seriously. And yes, this is a pitch for my affiliate program that I'm doing. I'm not, they're not a sponsor of the show, but they're an affiliate And if you want to support me, it's one of the best ways to do it. TradingView is also a great one. We'll talk about that here in a second. But yeah, guys, look, I mean, seriously, Skillshare, it's $100 for an entire year. There's tons and tons, hundreds of courses on Skillshare. Tons of courses of all kinds of things. You want to improve your own human capital, that's the best way to go. It's dirt cheap. I mean, I'll tell you what, I have spent thousands of dollars on courses. My first trading course was called a Pro Trader course, no longer available. And my mentor isn't even teaching the course anymore. And it was $2,000. $2,000. That was like 6-7 years ago. I think it was like in 2013, maybe 2014. It was a long time ago. But that's what I did. I wasn't even out of college yet. I was in my senior year of, my bachelor's degree. So $2,000. I mean, I've spent hundreds of dollars on other courses that probably would add up to another $1,000. So I've spent thousands of dollars. And you know what? I'm going to continue. There's another course that I'm looking at for YouTube ads. That's probably going to be another $1,000. I don't know if I'll take that because I can't really spend the money now, but I probably will do it in the future. In the end, guys, focus on your own human capital. Focus on starting your own business. Focus on taking control of your life, taking back control of your life by controlling the source of your income. If you can do that, then you won't have to worry about being laid off again. Guys, look, I mean, I've told this story a lot of times. I'm going to tell it again. I know what it's like to get laid off. I know what it's like to lose. To not be able to live the life that you've built for yourself. I know what that's like. My wife and I lived through an eviction very early on in our marriage. We were making nothing, to be honest. My wife had just gotten out of college. She was working a part-time gig. She didn't have I was working a part-time gig as well. Neither one of us had, any real money, so we had to live with friends and family. We ended up living with a friend and, loved one in our life, and they ended up the husband lost his job. The wife was a stay-at-home mom, no, she had a part-time job, but it wasn't, it wasn't enough to keep the house afloat. He lost his job, and he got, it spiraled out of control. Eventually, they tried to continue paying what they could on the mortgage. Eventually, everything just hit the fan, and we all ended up getting evicted with them. Now, I know it wasn't going on my credit score or anything of the sort, but seeing your stuff on the front lawn, we were living in the front of the house at the time, and so our stuff went out on the front lawn, and their stuff was out on the front lawn too. I don't want to diminish the pain that they went through, but we all helped each other out, and it ended up, it ended well. I'll tell you that. It ended well. They're doing great now. Life is good, but it was so painful. I've never lived through anything more painful in my entire life, and I know that our friends would say probably the same thing. It was the most painful thing in the world to get kicked out of our friend's house, to get kicked out of your own home. It was it wasn't fun. It wasn't great. And it was very, very painful. So guys, look, I know what it's like to lose a job, to lose an income, and to be in dire financial situations. I was broke, okay? At one point when my wife and I were married, we were broke. We didn't have 2 cents to rub together. Now, I say that metaphorically speaking. Obviously, we had a little bit of money, but we didn't have much, right? We couldn't even live on our own. We couldn't even get an apartment, a 1-bedroom apartment, 1 bedroom, 1 bath. We couldn't even do that where we lived. And this is Texas. It's not exactly like California and Los Angeles where it's a lot of money, we couldn't even afford it. Now, eventually things have improved, and now we're in our own home, and well, technically we're renting it from the bank, but you get the idea. Things have improved and things are better now. But guys, seriously, I'm telling you, I know what it's like. So I'm not trying to be a jerk. I'm not trying to be arrogant when I say to choose to not take part in the recession. Okay? I know I'm not trying to be that way. What I'm trying to say is, looking on my own past, I wish I didn't take part in the recession. I wish I didn't take part in the financial turmoil that kind of engulfed us all. But what I mean by that is, don't focus on the news. Don't focus on the media. Hunker down. Now is not the time to rest. Now is the time to work. Now is the time to learn a new skill. Now is the time to start a business and take control of your life, so that this doesn't happen to you anymore. So that you don't have to rely on a business for your income. You see, I classify people who have jobs that are from other people. If you are getting paid by somebody else, I classify you as a dependent. Even though you might have your own house, you might have your kids, you might be making lots of money, you're still dependent on that company, because the minute that company takes that job away, because the job is not yours, the job is the company's, and they're going to do whatever is within their own self-interest to benefit themselves. And if that means having to close down a few jobs in order to survive and save the other thousands that they employ, then so be it. That's what they're going to do. They're business owners. Business owners make the tough choices like that, and it sucks, and nobody likes it. Not even the business owners. It's not like they're greedy fat cats that are sitting there that are they can't wait to lay you off, to screw you over. No, that doesn't happen. Maybe, but I mean, come on. Very rarely does that ever happen for that reason. They do it because they have to. They do it to keep the business afloat. They do it to keep having the ability to fight another day and to make make money in the future. And also, it also just so happens to save other people's jobs. So they wouldn't hesitate. So you shouldn't be dependent on them. Work on your side hustle. Work on a business. Learn how to trade like I'm doing. That's a great way to do it. But I'm also doing other things. I got a blog going. I got a podcast going. It's not the only thing I'm doing. And I encourage you to not let that be the only thing you're doing too. I mean, don't just have a job, right? And that you go to. You need to take control of the source of your income, because, guys, you don't want to be in the position that I was in when I first got married. That my friend was in when he lost his job. You're not always able to find another job right after. When times are good, then yes, I can see a justification for working for somebody else, and because you have the freedom of mobility, right? You can always move to another company if you want to, because everybody's hiring. But man alive, that's not always the situation. When times are bad, that is not the situation. So I'm not trying to be a jerk when I say that. Please don't take that as that. Look, I have a lot of sympathy for people who have lost their jobs, because I've been there. Heck, I'm not making any money doing what I'm doing now. Remember, this is my journey. I'm not, you can't tell me that you don't know what it's like because I make $10K, $5K a month with online. I'm not making that. I'm not making a dime. I made $7. I made $7, guys. Come on. All right, $7. I was messing around with retail arbitrage on Amazon, and I sold a little tiny fabric lunchbox that I bought from IKEA. I made $7 on it. I mean, you tell me, that's not exactly $1 million, So I ended up deciding against doing retail arbitrage because it just took so much time, and I didn't have enough time to do it on top of everything else that I was doing. So I had to just cut my losses, and I figured, you know what, I don't really have that much of a passion for this. And I ended up getting bid out in bidding wars on Amazon. Sold a product. There wasn't really a lot of sellers there, and then more sellers flooded in. I couldn't sell my product. Thankfully, if you're going to experiment with it, IKEA is great because they give you like a 360-day return policy or something really massively crazy. It's not a 30-day. It's like a 360, 350-day return policy, something crazy like that. So I was able to recoup the vast majority of my investment. I only lost a little bit of money. But, it was a good try, though. And I genuinely think you can do it. I just think it takes a massive amount of work, way more work than anybody will ever tell you. And the same goes for this. Trading takes a massive amount of work. Blogging, podcasting, having just content creating, being an influencer, all of it takes a massive amount of work, guys. Selling courses that you create, creating the courses, marketing it all, creating the ads. I mean, guys, you were talking about hours of work. It's a lot of work. It really, truly is. Now, granted, no, it's not like laying asphalt in the dead heat of summer in Texas, right? It's not like, being a roofer and being on the roof and, replacing people's roofs and stuff in the dead heat of Texas. It's not like that, but it's a lot of work, It's not easy, which is why the bulk of people don't do it. But I'm telling you, man, if you can push past it, there is light at the end of the tunnel. I fervently believe it. So, guys, that's how you would choose to not take part in the recession. That's how you would choose to not take part in all the political turmoil. Don't focus on it. Don't focus on it. Focus on yourself. Focus on your own human capital and start taking control of the source of your income. If you hunker down, you get to work, you're not going to think about all the depressing garbage that's out there. You don't need to add that to your life. Choose to ignore it. Don't get on Twitter, Facebook, social media in general. Don't get on the social medias and start watching news and start reading comments and start getting into fights with people who have nothing else better to do in their life than to, get everyone angry. Don't do that. That's not productive. That's not going to benefit your life. Look, if you want a better life, you need to make better choices. Okay? That's the truth. You want a better life, you need to make better choices. The better choice is to not focus on all of the media and all the garbage and the toxic stuff that's out there. The best thing is to hunker down, focus on yourself. It's a very Ayn Randian opinion. It's called objectivism. I don't 100% agree with everything the objectivist philosophy, but I do classify myself as a objectivist of sorts, a Christian objectivist. She was not a Christian. But, that being said, the main philosophy was to focus on yourself and not really focus on altruism, focusing on the collective. No, focus on the individual. Focus on your own life. This doesn't mean don't care about people. This means focusing on yourself, focusing on your skills, and as your life benefits as a result of your hard work, others' lives will benefit as well. Other lives will benefit, but you don't do it for them. You do it for you. And that's kind of the general gist of it. But guys, look, you don't have to take part in this recession. You can choose. You have a choice to not take part in it. We are the captains of our fate and the masters of our souls. We choose our destiny. We create our own destiny. And sure, bad things happen. Things happen to people that we can't control. But we choose our own destiny. So make the choice. All right, guys. Well, hey, I want to give a shout out. I mentioned TradingView, but I didn't really talk about it too much. Guys, TradingView is an absolutely amazing charting software. Let's go ahead and go to the homepage here. Absolutely amazing charting software. It's like the social media site for, basically for trading. And while I don't really encourage you to get involved in all the forums and the discussions that go on and everything that are on TradingView, I do encourage you to go check it out. It's an amazing place. I'll put the link in the description below. It is an affiliate link if you want to, help me, support me in what I'm doing here. It's only like I think they have a subscription service that's like $15 a month. It's really cheap, but it's awesome, guys. So I highly encourage you to get involved. I highly encourage you to look at this if you're interested in trading, if you're interested in a charting platform. Honestly, TradingView is like the best one out there. It's the one that I use every single week, and it's awesome. So, guys, that being said, I hope you guys enjoyed this episode. If you did, make sure to hit the like button. Also, make sure to subscribe and hit that bell button so that you are notified anytime that I produce content. And if you like this show, if you like what I'm doing here, please share it. Go out, get out there right now, share it on social media, share it with your friends, share it with people that you think need to hear this. And if you do all that for me, guys, I'll see you guys in the next episode. As always, know the risks, plan accordingly, and have a great day. day.